All right, we'll go ahead and get the work session started. Thank you, everybody, for your attendance. I'm glad we moved this upstairs. It would have been a little packed downstairs in our conference room. The main event today, of course, is our early intervention program presentation. Therefore, I wanted to ask before starting in on that, is there anything that you wanted to raise with the commissioners before we launch into that discussion that has nothing to do with the EIP? Any other public comment? Very good. And we'll cross that off the list. And the commissioners, are there any announcements that you wanted to make? I expect this to take the entire meeting, so if you wanted to announce anything, now would be the chance. Okay. Over a year ago, Ed Fosnock came up to a COG meeting, I think, and told us about the early intervention program. That probably would have been a year and a half ago at this point, most likely. And to our credit, we jumped on it and applied. And I want to thank Planning and Zoning for pulling that together, along with the other commissioners' support as well. And we're awarded the $100,000 grant from DCED in order to do and participate in the early intervention program. That program, we could go into more detail, or the consultants could, but in short, they are doing a fiscal analysis and an management audit of the county. And it's taken a few months to do it. It took us a few months to do the selection and everything. They have come in at, I think, the end of 2017 and started going through our financials. They met with all but I believe one of the directors in order to do a management audit, and have produced a lengthy document that with many recommendations. Several of them are very important and ones that we want to go through today. Just to let you know, we're not going to be taking questions during the presentation. I ask that you would write down your questions and ask at the end. We don't want this to get sidetracked off of the 5-6 really important things that need to get out. And then we'll have a Q&A session at the end. I did want to emphasize two more points about this early intervention plan. First of all, this is in draft form. They will be accepting comments about the document. So don't think at this point that what they're giving us is the final version. There still is, if there's an error here or there, we will have a chance to fix those. Second of all, it would be advisable to accept a consultant's recommendation, but it's not like by coming in and telling us that this is a recommendation that the commissioners are going to accept it. So, again, just to emphasize, it may be a recommendation, but don't walk away saying the commissioners are doing X, Y, Z. So with that, I'd like to introduce the two consultants that from Susquehanna Consulting and Accounting, who worked up the plan, Mark Morgan, principal, and Ed Zach. So feel free to come on up and take over the podium. The show is yours. Go through your plan and then do the Q&A if you would.
Okay. Good afternoon, everybody. Just to give you a little history on the EIP, kind of elaborate on what the commissioner has said. The early intervention program kind of has some stigma to it that's probably incorrect. The early intervention program is designed to help governmental entities, not just counties, any municipality, take a look at what it's really done fiscally in the past, take a look at what's currently happening, go through each department, and then project where they're going to be in the future to help them identify if there's things that are going to come up, that they're going to face fiscal challenges, if there's fiscal challenges happening now, what the financial condition of the county is, and what are some of the practices that are going on statewide that they may want to consider implementing, and as the commissioner has amply said, may not have to implement, but just we're recommending because it is kind of the common or best practice that we've seen in the industry at this point. So with that being said, the first part of the plan was really looking at some historical data for the county, background information. Part of that looked at both population, workforce, financial characteristics, and kind of as a summary or a way of summary, just to give you a little bit of history on the background, the historical population of the county really has declined from a high in around 1970 to a low of what's estimated in 2016. The high being about 48,000 in 1970 to a low of about 40,000 people today in the county. So that's a pretty significant decline in population, almost 20%. Other interesting statistics from the demographic data. Warren County has a poverty rate of about 14.1%. The statewide poverty rate's about 13.6%. So pretty much in line with the state poverty rate, a little bit higher, but not significantly higher. As far as employment statistics, total population, there's 34,000 of those people that are age 16 and over. There's 19,406 in the workforce. So of the total population of the county, only about 46% of the population of the county is in the workforce and actively employed. The county has huge recreational opportunities with, the Allegheny National Forest and some subsets of that. As far as birth rates in the county, the birth rates are down. They're down nationally, they're down statewide. But as far as the Warren County birth rates, in 1990 there were 566 births. By 2011 it had declined to 392 births per year, which means the population is continuing to decline even presently. The employment statistics, there's about 26.9% in management, professional, and related occupations. There's about 15.6% in service occupations. There's about 24.5% of the workforce is in sales and office occupations. About 1.2% in farming, fishing, and forestry. 5.5% in construction, extraction, and maintenance occupations. And 26.3% in production, transportation, and materials moving occupations. Compared to the state, the big factor that when you look at the state numbers, only 13.4% are in production, transportation, and materials moving, which means you're a more blue-collar county. Less office people, more blue-collar jobs in the county. Again, some further employment statistics. There's 16,074 people in private wage and salary. There's 2,695 government workers and 1,572 self-employed individuals. Distribution of income. When you look at distribution of income in the county, median income for households is $44,977. Median income for families is $57,377. And basically the distribution of the income in Warren County versus statewide, all the income levels, when you look at the ranges, tend to be lower. So the income levels in Warren County are about 15% or so lower than the state averages, on average. So when we looked at all of that historical data and said what is really happening in the county as a whole, obviously the population's declined, the birth rates declined, and the civilian employment has declined. So what that means is we have less people living in the county, we have less people being born in the county, and the real factor with the people being born in the county is the people being born today will be our workforce 16 years, 20 years from now. So if we have less people being born, we're going to have a smaller workforce later. And that's what we're seeing in the employment statistics, is the actual workforce is declining and shrinking within the county. The data also shows that employment in virtually all sectors are declining, with a minor increase in professional and related occupations. But basically all of the manufacturing and blue-collar job employment is still declining. That's pretty much in line with the statewide trends and the national trends. The statewide trends are shifting more to a service organization society, and so are the national trends away from the manufacturing and blue-collar employment. So it's not really different in Warren County. The average household in Warren County has fared worse than the average Pennsylvania household between 2000 and 2016. The Warren County households and Pennsylvania households in general experienced a reduction in purchasing power in their wages, which is not unusual because that's been the national trend. It means a dollar doesn't stretch as far today as it did back in the year 2000. And Warren County resident household income is not keeping pace with the consumer price index. So wages haven't risen at the same rate as the consumer price index, which means our residents have less disposable income to spend, which means our economy doesn't expand as fast, and it also means that we don't rebound from recessions like we had as quickly. After we looked at the background information, we looked at the financial condition of the county. And what that is basically where the county stands today and where it's been the last 5 years. Some of the most significant items that we noted: the assessed property values grew at an average of 0.26% a year. 0.26% a year. That's significant, in fact, because the consumer price index grew at more than 2% a year, which tells you in and of itself that the county real estate tax base didn't keep pace if millage was not increased to be able to pay the county's bills. The general fund operating expenses increased from $13.1 million in 2012 to $15.9 million in the 2018 budget. The growth rate in general fund expenses basically kept pace with the consumer price index, but our tax base didn't keep pace with that. So hence, you saw some millage increases in taxes to be able to pay the county's bills. And when I say general fund bills, that's running the general government operations. It's not the grant-funded human services, although there's a part of the general fund that does subsidize the human services for the county match portions. That's the portion we've got to contribute toward grants to get the state and federal grant dollars. The biggest drivers of the general fund expense increases were debt service, about $519,000, the emergency system, $229,000, and then benefits, $154,000, and so on and so on. They're in the report, but the real drivers of most county budgets and most governmental budgets are salaries and wages. Salaries basically kept pace, but did not exceed the CPI, so nobody was getting exorbitant raises or anything. They were just maintaining the standard of living. Nothing unusual with the salaries, but benefit costs are escalating, both pension and health care. And healthcare costs, we all know it from our own insurance premiums, but healthcare costs continue to rise pretty rapidly. In 2012, taxes represented 65% of the county budget. Today, they represent 69% of the county budget. That's a function of two things. One is our grant pass-through funding has declined, which means our state and federal funding has declined, and we've had some millage increases in taxes at the county level. As part of the plan, we also went and looked at each department. We interviewed each department, looked at each department's operations, and as a result of meeting with those departments, we identified what their needs were, their capital needs, their operating needs. We understood how they were operating, how they were staffing their departments, and we looked at what systems they had in place, what automation technology they had in place, what efficiencies they could achieve, and whether or not other counties were doing things better. And we incorporated all of those recommendations in the report. In addition, we took all that information and projected the financial trends of where the county would be the next several years. The major findings as a result of that are basically, and the intent of the EIP program is to come up with 5 or 6 major initiatives that the county's facing, primarily fiscal initiatives, to help them lead the county forward the next 5 years. It's a 5-year plan. As part of that financial initiatives, some things popped out. The first thing is that the county financial records, as far as their accounting records, and when I talk about their accounting records, they're internal accounting records, and then there's some external records, which are external audits of the county. Those records did not agree. Primarily, we believe because there were certain audit adjustments that were done each year in the past. We don't believe those audit adjustments got posted up to your systems. So it's pretty hard to use fiscal data if it's not accurate. So the fiscal data that the commissioners and the departments are getting really isn't accurate. It doesn't give them a current financial picture. It gives them a current financial picture of maybe the revenues and expenses for the current period, but it doesn't tell them what their assets and liabilities are related to that accurately. So one of the recommendations we had from that process is, obviously, we need to get the audit adjustments posted up. We need to get the financial records cleaned up. In addition, we need to get some things that are not currently recorded on the books and records, recorded on the books and records. Things like row office bank accounts. Things like fixed assets are not tracked and recorded. Things like the pension system, assets and liabilities are not recorded. And we need to do that before we can do anything else, so that we have accurate fiscal data to make good management decisions as far as the county as a whole. So that the commissioners have good data, so that department heads have good data, and so that good, sound fiscal efficiency and effectiveness recommendations can be made. The second thing we noticed is the 2018 budget. I guess the nice way to say it is probably had some errors in it, maybe some projection errors on tax receipts. We believe the current tax revenue is going to fall short of what it's projected at, and consequently we think the commissioners need to revisit the 2018 budget, and you may have to reopen that budget depending how significant those differences end up being. We think they're fairly significant, several $100,000. A real telltale sign is if you take the current assessed value on real estate and multiply it by the millage that was passed in your ordinance, the taxes that are in the budget are in excess of that. And we know we don't collect 100% of everything we assess. We have a collection rate that has to be applied to that. So we think you need to take a strong, hard look at the 2018 budget. Make sure that you're going to be able to have spending authority for everything you have in the budget. And that probably has to be done fairly quickly. We actually recommended that part of what we called an emergency plan, actions that need to be taken in the next 6 months. Because obviously you're going to get to the end of the fiscal year and may not have enough revenue to cover your expenses. The third thing we looked at was the county's taxing ability. Taxing ability means a county can assess real estate taxes up to a millage cap without going to the court for approval. The current millage cap in the county code is 25 mills. You're currently at 20.5 mills. Combined with what we believe the current budget is short, plus just inflationary increases, which we use some assumptions and projections. For example, we used 2.25% as a wage projection, which is pretty much tied to the union contracts and the negotiated agreements. And some assumptions for healthcare rate increases for insurance premiums of about 5.8% that the Society of Actuaries for Healthcare Actuaries put out. And then some general inflation increases, which are projections of the Consumer Price Index for the remainder of the costs. Basically, when we compare the projected revenue of the county to the projected expenses of the county, we believe if you raise taxes as you need to, or as the county needs to fund the future budgets, the county is probably going to exhaust its statutory taxing capacity by 2021. Which means at that point, one of two things will need to happen. Either the county will have to have a reassessment in place, which is a very unpopular thing, and I understand that. So it's an option. It's not a mandate, it's an option. You may have to do a county-wide reassessment to rebalance the home values and the tax millages assessed to create taxing capacity, or you'll have to go to the court and ask for court approval to increase millage beyond the millage cap of 25 mills. Now you can do that annually, but you can only do that for an additional 5 mills, and then you run out of taxing capacity again. So both those options are probably going to have to be explored. We don't recommend one over the other. They're both just options. Most counties are facing, as your county is, you haven't had a county-wide reassessment in a significant period of time. I think it was in the 89. So it's been almost 30 years since you've had a countywide tax reassessment. They are expensive. They're not popular. We don't advocate them over going to the court for approval for millage first. But at some point in the not too distant future, I'm fearful the county is going to be faced with some type of tax reassessment going on. In addition, because of the problems we noted in the fiscal data, and basically as a result of almost every department we interviewed, didn't feel they were getting adequate fiscal information, and part of that is a function of the weaknesses of the current system, combined with the limitations of the current system to allow them access to their fiscal information at a department level to manage their budgets, combined with fiscal recommendation, the fiscal department's recommendation. And we were kind of concerned about fiscal's recommendation when we started this process, given what we found the condition of the financial information in. So we kind of did our own assessment and said, okay, what are the system limitations, and what does fiscal really need, and what do the departments really need? Really, the current fiscal accounting software can't give departments online access, which is almost unheard of in today's technology world. So, as part of the early intervention program, or a subsequent phase of that, the county could get some assistance, but one of the major recommendations is as well that they probably need to consider getting some new fiscal software to help them capture the data. But I think before they're in a position to do that, we've got to get the books and records to a point where they're accurate currently, and we've got to get what's not recorded in the system recorded in the system so that we're ready to go to a new system. As part of that new system, there were also a lot of requests by departments for things such as human resource management tools, protocol tools, policy and procedures tools. So a lot of the new systems have separate modules to do that, and certainly will allow the county, as part of that new software implementation, to actually build some of those processes into the system. In addition, it'll allow the county to get fixed asset records recorded. And fixed asset records don't sound real important, when we talk about buildings. Somebody can't grab a building and walk out the door with it. But when we talk about high-value technology, combined with the fact that the county contracts out its technology services and we don't have a good inventory list of that creates some exposure to the county. We don't want things to walk off that we paid a lot of money for. So when we get a new system, or the county gets a new system, they can start to get control, get some fixed asset inventories, know what we have on hand, know what we don't have on hand. It'll also be a good tool for budgeting for future capital needs as part of the development of the capital budget. We also had a series of personnel actions that came out of the recommendations. We had one unusual event in this set of interviews that I have to give your department personnel credit for. Somebody actually said they didn't need a person. I don't think I've ever heard that, ever doing all the early intervention programs, but somebody said they could reduce their staff by one. It's very, very unusual, but it did happen. So there's some personnel actions. I don't want to get into specifics on personnel actions, but there's personnel actions that could create some savings for the county. They're recommendations, they're not mandates again. There are things we saw as a result of both our meetings and our benchmarking of Warren County against other sixth-class counties. Some things popped out, and there were some departments that probably need some further analysis and time studies and so forth done to fully understand what is going on, where their budgets were out of whack, and we identified some of those in the report. Another step is that the county needs to really challenge all of their budget directors as part of the county budget process. And some people are advocates of zero-based budgeting. Some people are advocates of taking last year's budget and rolling it forward. I'm kind of an advocate in between there. I think you have to challenge all of the departments to justify their expenses, which means they can't just get what they got last year and add 2% and get 2% more. I think there has to be, particularly in the financial position the county's in, there has to be a budget process that requires some justification, statistical data, looking back at some historical statistical data, whether it's caseloads, number of transactions processed, whatever, particularly given the fact that the county population's going down, so a lot of those statistics are going down, or should be going down. Maybe they aren't going down, but should be going down, which should mean we should need less people to process the transactions. Not guaranteed, but we should. But that data is not presently being captured, that statistical data, as part of the budget process, so we think that's very important, going forward to actually capture that statistical data and incorporate it into the budget process and require justification not only for increases to the budget, but for what departments already have, to make sure it's meeting the needs of the residents, make sure it's fulfilling what the board wants in terms of policy and in terms of what the constituents and taxpayers want, and need as far as services. We think there's going to be some challenges, facing the county. Obviously, a declining workforce, declining birth rates, income levels that have not kept pace with consumer price index, expenditures that the county really, I don't want to say is beyond their control, but not in their control in a great extent, are going to continue to rise. And they're going to have to decide and make some tough decisions, and I'm glad you're on that side of the table and I'm over here. But the decisions are getting harder and harder for counties in that resources aren't growing. Everybody wants the same service they've always got, and there's going to be tough decisions to make about which services don't continue to get funded at the same level. There's a series of other recommendations in the report. I don't have the exact number here. See if I can get that for you quickly. There's a series of about 47 other recommendations in the report, ranging from specific departmental recommendations to more county-wide broad recommendations. I didn't plan on going through them one by one. I could bore you for the next probably 5 hours going through them one by one. But some of the more significant ones are that adult probation and juvenile probation are two separate departments right now. And hopefully I don't offend anybody in the audience by saying this, but most counties are looking to combine adult and juvenile probation into a single probation department with one head. running all probation services. And given the size of your county, that may be a viable option. It may not, but as far as best practices, that is what some of the counties are doing to try and save some probation dollars. The county has approximately $750,000 in a landfill closure fund. The fund really hasn't been utilized for, I think, about 25 years or so. But it hasn't gotten official notice of closing of the landfill from the landfill authority, so we're recommending that they work pretty diligently with the landfill authority to get that process completed, which should free up that money, which should help with some capital needs of the county. We wouldn't recommend putting that or embedding it in your operating budget since it's a one-time source of revenue, but certainly could be used to help fund some capital needs. A lot of the departments had obviously software needs, which kind of brings up a point of fiscal trend analysis. There seemed to be some deferred maintenance which was occurring, and deferred maintenance means on your capital items you kind of defer making upgrades or improvements or purchasing a new capital asset, which is pretty much what has driven, I think, the 2018 budget has infused some additional capital spending into that budget and caused it to increase to replace some of those items and take care of some needed repairs. So the deferred maintenance actually causes a lag in the timing of when you spend your money on capital needs. So I think in the past there's probably been underspending, and the downside to underspending in the past, usually you have to overspend in the future to catch up. So I think that in and of itself is an issue that you're going to face going forward. I think in terms of the new accounting software, it will help identify those capital needs. You'll be able to identify the fixed assets. You'll be able to set normal replacement cycles. You'll be able to do some analysis in capturing costs, let's say on vehicles, when it's better to buy a new one or lease a new one than to try and maintain an old one because repairs are costing you too much. Right now, all that data, if it's gathered, has to be gathered manually out of the system, basically. It's not tracked by fixed asset item. Fiscal, I think we've had some fiscal personnel changes in the county. I guess, in terms of where we were from a fiscal standpoint, obviously the financial records were not in ideal condition. So maybe those fiscal changes are welcomed. But in terms of going forward, I think the county's actually hired somebody recently into the fiscal position. And in terms of ideal timing for a new system, it's probably ideal timing for a new system with a fiscal personnel change, and compounded by the need for a new system. And combined with the need for a new system, it's probably ideal timing. We did look at policies and procedures. Policies and procedures, I don't want to say they were non-existent. Policies and procedures exist, but they certainly were not written policies and procedures, at least that we were given. So we certainly recommend that the county develop some more formal policies and procedures, both for employees and just courses of action. It's good standard operating practice, particularly when you have personnel turnover. And part of this EIP process, we came in, and I think within several weeks or less, the fiscal person left, and there was not a lot of history there. So it was difficult to get fiscal information, and if there had been some standard operating policies and procedures, it would have been a lot easier. I can't even imagine what your new fiscal people went through to try and figure it out. But just from an external standpoint, it was difficult at best, to get fiscal data. Human services, probably the most important thing with human services, the way the county operates right now, you have a joiner with Forest County for your human services, Forest Warren Human Services. It's a separate legal entity. But all of the county employees there as well as their payroll and their pensions and their health benefits are part of Warren County. Our activity as far as our general government operations is limited to contributing money to them to match their grants so that they get their grant funding. So that's kind of our fiscal oversight in matching their money. But we think the fiscal oversight probably needs to go another step. We like to see when we come in that when they're requesting grant dollars, we know exactly what grant they're requesting it for and where the match is going. Presently, all of our dollars are kind of lumped together that we give to Forest Warren Human Services. So we couldn't really break it out by, let's say, children and youth, mental health, whatever other programs they're administering. And the issue with that is some programs, there should not be any match required, which means the program may be going further or delivering services that the board may not want them to deliver. In other cases, they may be short money that they need for something else that you do want them to deliver. But right now, given how the oversight's functioning from the budget standpoint, it's very difficult to tell that. Combined with inaccurate information, it's almost impossible to tell that. In addition, Human Services again was saying that they weren't getting timely, accurate financial information through the fiscal department of the county. So I think part of the ongoing future process, whether a new system or the current system, would be to make sure fiscal delivers at least monthly and quarterly reports to not only Human Services but all departments. Information technology. The major concern we had in the information technology arena was the information technology is contracted out, the service, and it's twofold. One is it's almost a single point of failure. We don't have anybody internally who really understands our information technology. And two, we kind of unilaterally are at their mercy when it comes to budgets and what our future needs are. That's not to say that is a totally bad thing. It depends on available technology, human resources in the county, and whether you have people that can adequately run the system. But we should have somebody at least responsible for oversight of that function, and at least from a budgeting and monitoring and management standpoint. As far as the jail, the primary issue at the jail they had was pretty much human resource software, helping to manage their personnel, overtime, staffing, scheduling, leave time. The other issue that came up as a result of the jail is the amount of persons that visit the jail because of contempt hearings. And it's a function of the court system and how they process those no-shows for contempt hearings and how they sentence them. So we think there probably needs to be some review and some interaction, more interaction, and I know the commissioners are at the President Judge's mercy, but we need to work maybe harder with the judges in the county to look at potentially alternative sentencing, particularly for contempt hearings. Nonviolent offenders, if they don't show up, throwing them in jail just costs us a lot of money. And it's not going to make them show up anymore for their court appearance. Other than we're going to pay to have them there, we're going to pay the Sheriff's Department to escort them there. So I don't think that's a good answer. So maybe some alternative sentencing, looking at, the prisoner population and why they're there. And that came from the personnel of the county, not us. I think that would be a good thing. There's some programs that Juvenile Probation and Human Services were asking for, some software needs that would allow them to work more efficiently together and communicate better together. Planning and zoning. The biggest thing, I think, is the comprehensive plan. It was last updated in 2005. It's It's required to be updated every 10 years, a full update every 10 years. There was some update done on it, I believe, in October of 2016 or 15, but not a complete new comprehensive plan. The Prothonotari's office, as far as it relates to the court system, is, I believe, behind on scanning some documents. The court system would like to see that get caught up to make the process much more efficient. The Public Defender's Office would like, again, access to some software, the JNet system, which would allow them to do their job more efficiently. The Sheriff's Office, there were 3 things we identified in the Sheriff's Office. One was what we call, or what the county calls, night patrols. 2, the amount of out-of-state transfers that are being done. And 3, the use of full-time Sheriff Department personnel for building security. Those are not typical in most counties, and contribute to Warren County's sheriff's budget being almost 50% higher than most second-class counties. There's another unique thing in Warren County. You guys have a lot of unique things here in the county you should be proud of. There's a lot of unique things you should be proud of. This one is just unique, purely unique. I'm not sure I know of any other county in Pennsylvania, but your tax calendar is kind of flipped from most counties, which means your real estate taxes are assessed in the fall, not in the spring. That's not a problem per se. It gives you more time to pay your taxes as a taxpayer. I'd kind of like that in my own county. The issue, though, when you look at the county's financial statements, and we know they're not necessarily accurate, but we believe the cash balances are accurate. We believe those were reconciled by the Treasurer's Office, and we believe the cash is a good number. The year-end, counties are on a calendar year-end, so the December 31 cash balance that's sitting in those bank accounts is kind of distorted compared to other counties. Warren County has $4 million or thereabouts in the bank account of its general fund at the end of the year, but you've got to remember that's pretty much your full year's taxes you haven't exhausted. That's got to get you all the way to the following September when the money starts coming in, which means you've got to issue a pretty hefty tax and revenue anticipation note in January. Not required, again, but just a recommendation. You may want to consider flipping that tax calendar back to the beginning of the year. It would do 2 things. One is it would certainly reduce the amount of the TRAN you need and the interest borrowing costs on that. And it would also allow your financial statements to be more comparable to the other 66 counties in the state. So right now, it looks like your financial position is really healthy at the end of December, when in fact it's not. It's actually not terrible, but it's not great. Even though you got $4 million in the bank. So that's an unusual tax calendar for a county. It creates some other financial management challenges because it's not on the normal cycle. I'm not even sure. I'm going to ask a dumb question since you're all obviously residents. Does everybody like paying all your real estate taxes at one point in the year? Instead of having, the county piece, kind of in the beginning of the year and the school district and municipal later. I know it'd be a problem for some people because we'd be asking them to accelerate the payment of their bill, but, we could adopt a gradual tax calendar to get it rolled back over time. But it just seemed odd, unusual. You have another unusual factor. Central purchasing is somewhat decentralized, and we don't want to make this too big of an issue because I don't want to say our purchasing is voluminous, but considering to have some type of centralized purchasing, particularly maybe with human services, may yield some efficiency savings in pricing. Departmental budgets, pretty much at a department level, department heads should be responsible for their own budgets. Unfortunately, they weren't getting fiscal data, and fiscal was trying to manage that process more than the department heads. And if the department heads were managing their own budgets, most of them told us they were keeping a separate system, which is just a complete waste of time. To do whatever management they could on the fiscal side. So, obviously, a new system, again, that would get them timely, accurate information is critical, and we would certainly want you to kind of hold department heads accountable for their budgets, not fiscal. Fiscal can do the budgetary control, but they shouldn't be responsible for what things get spent on and when and whether it gets approved or not. Reserve funds, as part of the process, we know the county has pretty much limited to no reserve funds. We don't recommend you have tons of reserve funds, but even from a bond rating, which isn't as critical to you, but if you do have future borrowing needs, it may become critical from a bond rating standpoint. You should have somewhere between 5 to 15% of your general fund budget as a fund balance. Pretty much you have zero right now. We have $4 million in cash, but it's got to get us for the next 9 months. We have a run rate of about $750,000, $800,000 a month in expenses, so it's only going to get us 4 or 5 months without having to borrow. So having a reserve balance would probably be a good thing. Maybe not an ideal time to try and do that, but keep it in mind for future budgets going down the road. As we get out 2, 3, 4, 5 years from now, that starting to put little amounts into a reserve fund for a contingency, something always happens in a county budget. I've never known that a county got through a year of nothing coming up unexpected. We did make a series of health insurance recommendations on health insurance, kind of some new common standard practices counties are engaging in to try and help control costs. We did talk a little bit about the interfund transfers to human services, trying to get those broken out by program so we can track that better. In addition, we have some issues with real estate taxes. The county assesses 2 pieces for real estate taxes, a general millage and a debt service millage. Debt service millage is a restricted tax, meaning it can only be used for debt service. It has not been a problem because we've not assessed enough in debt service millage to cover the entire debt service payment. But what was happening was, instead of tracking those separately like we're supposed to, we commingled them with general millage. And then we just reclassified general millage out of the general fund over to the debt service fund and called it debt service millage. It really wasn't debt service millage. We were thoroughly confused when we saw the tax numbers at first, because nothing added up. Transfer in and out accounts, from an accounting standpoint, transfer in and out accounts pretty much aren't used. They were just recorded as revenue and expense in both funds. So we kind of double recorded it. There was no accounting manual, as I said. When the fiscal person left, there was nothing for anybody to pick up as far as pieces. And cost allocation, there is a cost allocation process that was done. It was criticized as part of the domestic relations audit by the state. The county has taken a step and has engaged, I believe, at the request of the president judge, I believe it was at the request, to engage a firm to actually prepare a formal cost allocation plan. And really what that is a program's operated, but all of the support functions of the county, like human resources, accounting, fiscal, personnel, information technology, building use, equipment use, those type of things can be allocated to the cost of that program. There was a process. The state had a problem with that. There was some issues related to that in terms of documentation and lack of documentation. So the county's taken some steps to rectify that already, but we certainly would recommend that they continue to do that and continue to make sure they're capturing and recovering all of the costs they can. And then finally, a lot of the row offices provide services to the public. A lot of those services obviously almost all of those services have a related cost to them. There hasn't really been a study in the county to make sure that the fees being charged for those services to the public are adequate to cover the cost of providing those services, so we recommend you do some type of study to make sure we're recovering all of the costs. The last two sections of the plan are the capital budget. As part of the department meetings, we put together a list of the capital needs. A lot of the departments didn't have cost data or specific timing data, but what we could see was that there are a fair amount of capital needs, which led us to the deferred maintenance conclusion. A lot of the things hadn't been updated routinely. Software is fairly old. Computer cycles for replacement are not current. And then the last section talks about cost allocation, which I kind of just elaborated on in another comment, but it really covers, and the cost allocation primarily focuses on our side, on the general fund side, not the human services side, on really 4 primary grant funding sources: juvenile probation, adult probation, domestics, and rural school allocation are the ones that are primarily supported. Unfortunately, juvenile probation, we max our admin funding already with salaries and fringes. Same for adult probation. Rural schools, we don't really have an allocation. We pass that money through to the rural schools. So the cost allocation really is focused on domestic relations. And then we have a series of recommendations of things that were not captured in the cost allocation that probably should be captured in there. I don't think it's going to be a windfall to the county, but it's going to be several tens of thousands of dollars of additional recovery. The rest of the report is a whole bunch of financial numbers, which go through everything that I talked about, from the historical trend analysis, the last year, 5 years fiscal data on both revenues and expenses, to the 2018 budget, to a 5-year projection of where we think we're going to be, given some assumptions that I described earlier. And I think the last exhibits are some comparisons and benchmarks to other counties, as well as a first pass at a capital budget.
Very good. Well, at this time, first of all, thank you very much, both Ed and Mark, for sharing your wisdom with us and undertaking this project. I think it's very helpful, and I want to thank all the department heads that came today. Even if a lot of that information didn't directly have to do with your department, I think it's important for you to understand the overarching narrative and how you fit into it. I also wanted to note that many of the things, many meaning maybe 25-40%, are things that we have also identified in recent months, and some of them we're already working on. So this will just, I suppose, kind of bolster our understanding of it and enable us to move forward. At this time, we're almost out of time, but let's go a little over on our meeting, just because I think this is such an important conversation. But if anyone feels that they don't have the time and want to slip out, we'll understand. Why don't we first open up to commissioners for initial questions of Mark, and then we'll open it up to the general department heads.
How far back does your fiscal information go back?
The fiscal information went back 5 years to
2012, correct?
2012.
Okay. Thank you.
Commissioner Harrelson, do you have anything?
Not this time.
Ed.
Can I make some comments?
Yeah, first of all,
Sure.
Thank you very much. Let me introduce Ed Fosnock from the DCED. You handle this half of the state, right?
Yes, sir.
And he's walked us through this process from applying to administering the EIP grant. Thank you very much for joining us today.
Thank you. Just a few comments, if I may. First of all, we're trying real hard to change the name of the program. We're not being successful. But as long as the legislature continues to fund it, we can live with that. I do have a couple comments. The first one, Mark, you talked about reassessment. One thing that we try to emphasize is, yes, reassessment can give you the ability to raise taxes, but that's not you're not going to be able to sell it that way if you want to sell it to the folks of your community. The truth about reassessment, it's a fairness issue. Many people don't pay enough in property tax, others pay more than their fair share. I would guess, and I don't have any idea what the statistics would be in Warren County, but off the top of my head, I would guess that the residents of Warren City probably pay an unfair share, and the people outside of Warren City pay less than they should. That's because the properties in the city haven't increased in value at the same rate as the properties outside the city. So it's a fairness issue. And we did one in Lawrence County that I sold, and I was reelected by good numbers because we went out and we showed people how some people were getting a raw deal and others were not paying enough. Generally speaking, the people who fear reassessment the most are the ones who benefit from it the most. And that's all I'll say about reassessment. But I do have some comments on some other things. Mark, I think you've done a pretty thorough report. You've covered a lot of territory. One thing that I would recommend is that you compile a summary that hits on the details, sort of like a manager's letter when you do an audit. I read about half of it. I didn't have time to get through the whole thing. If you were to put together something that recaps the study, and I think it's a good study, but if you put together something that recaps it, it might be easier for the commissioners to be able to address some of the issues than to try to pick everything out of here. You make a lot of recommendations, a lot of good recommendations. I would add one sentence to all those recommendations. Apply to DCED for a grant for those recommendations. Put that in the document. If it's not in the document, you can't get the grant.
Well, while you're mentioning that, can we apply to DCED to fund a reassessment?
Probably not.
I know that. I know that.
You can apply for it.
Because that's what we fear, the price tag attached.
It's a high cost.
Yeah.
You're right. But if we funded one, or if we funded 3 of them, we probably wouldn't have any money left for anything else in the program. But there are a lot of good recommendations that I would, take a look at them and ask us for the money for them. You're probably going to get it. A couple of examples. City of St. Mary's, I don't know how familiar you are with there, but there's a woman in their office, Tina Graziani, who gets it. They're on their phase 3 grant recommendations, and we're funding all of them. The City of Sharon is going to get $200,000 because the recommendations in their EIP talked about blight. They're going to get money for blight. Now, we're not going to fund tearing down houses, but we're going to help ways for them to get it done. We're going to fund a comprehensive... Did you put a recommendation in here for a comprehensive plan?
Update the comprehensive plan.
Okay. I don't know if Dan Glass is here. Dan, put a recommendation in that you apply to DCED for a grant to fund that comprehensive plan. That's about it, I guess. I do have one comment, one recommendation that I respectfully disagree with, and that's combining tax claim with the Treasurer's Office. We did that in Lawrence County. Our treasurer ended up serving a year in jail because he had access. He had the ability to put stays on property that he didn't have as the treasurer, but he did have as the tax claim director. He put a stay on his own property. He didn't pay his county taxes for 5 years. So I'm not saying don't do it, but what I'm saying is if you do, make sure you have the ability to have more than one person and not just the treasurer's office, someone else to make sure that they're monitoring what's going on in there. And do you have a county controller?
No.
Oh, okay, you have auditor. Make sure someone keeps a close eye on that, because I voted to combine them, and we opened the door for the treasurer to do things he shouldn't have done. So I'd be very careful with that one. But all in all, I think you've done a good job.
Thank you.
I think you've done a nice job
Thank you.
with it. So thank you for giving me the chance to put my 2 cents worth in.
Well, thank you. Tell us a little bit about the timeline on phase 2.
As soon as this is done, as soon as you accept it, you can apply. Let me know when you're going to do that. I'll try to shepherd it through.
Actually, you could apply for a phase 2 and 3
Well-
You can have 2 open phases at one time, correct? I don't, it's
I've never done
subject to the funding.
Well, let's get phase 2.
Yeah, we can get phase 2 in
Or
works.
put everything in phase 2. I mean,
If you can get it,
you can...
if you can pay for it all out of
well,
phase 2. But-
you can apply for more than one thing
Right,
in a phase.
in a phase, yes.
A couple of examples, if I may. I said I was...
Yeah, there's a
like
few in
to
here
get-
that you could fund as a single phase.
New accounting system. Apply for a grant for it if you're going to do that. Okay, there's another one, but you'll find them in a few.
Yeah,
recap.
there's a fair in here. I'll do a recap of everything I believe that you can apply for in grant funding.
Yeah,
This is pretty voluminous to flip through every day, so we'll try to put together, it probably won't be a 1 or 2 page summary, but it'll be less than 5.
Okay.
Yeah, a lot of municipalities have studies this size and they're sitting on a shelf.
Yeah.
And that's, I say that respectfully.
I do too. I do too.
Thank you, Commissioners.
I'd just like to say a couple of things. So first of all, I appreciate the notion of having a summary, and I felt like that there are plenty of actionable items in this report. I found it pretty easy to digest, actually. A couple of things is I really appreciate the work that was done here, just because there are a lot of really fantastic items that are identified in it that are going to make long-term financial positive gains for the county, just generally speaking. The only issues that I had with it just generally were some of the financial trend analysis were done on pretty broad assumptions of how the financial trajectory of the county goes. So, some of them, associated with, like, for instance, medical costs, costs for health care and stuff like that. There's a lot that this board has done in order to address those things, so I don't think that some of these assumptions are going to pan out the way that they're portrayed in the report. And I just wanted to kind of state that, just because I think that there are a lot of changes that are being made related to this, and that's a good thing to keep in mind. Other than that, I'm very happy with it, and I'd just like to thank you for your work and look forward to continue to working with you on this in order to kind of create as cohesive and as intelligent fiscal policy and trajectory for the county as we possibly can.
Thank you.
One thing I did want to note was the one office that we did not get to yet was the elections office.
We did talk to them over
Okay,
the
good.
phone.
Yes,
Yeah, we did
so-
talk.
Okay, so you're going
We will draft that. And
the
include it
obvious
in the
elephant
report.
would be that our machines
Voting
are about to be
machines.
decertified. Is that something we can apply for? Less than 60 other counties?
67.
Yeah, you'd still be out of business.
Yeah. All right, very good. Well, at this time, why don't I open it up for questions from the department heads. Department heads, please state your name, what department you're from, and keep your comments to a minute if you could. Denny?
Yeah, I'm Denny Moxgard, the county treasurer. One of the things I would just want to say about the fiscal system is one of the limitations we have is with licensing. Only the people that have a paid license can get to it. So I know all the department heads don't have it.
Right.
And with my experience over my lifetime with programs is companies or governments only use it, the horsepower of it to a certain point. They don't get the full horsepower
Correct.
out of it. So I don't think we've done a good job as a county from the day it was put in 2006 to have everybody be able to
Agreed.
use it.
Agreed.
So I'm able to monitor my budget because I use it every day.
Right.
Okay, that's that. The landfill money of $750,000, I'd like to know where it is. I've never seen it. What account?
It's not a county fund. It's the Solid Waste Authority.
Solid
fund.
Waste Authority fund. But
Would
it,
have-
I was to say, I've never seen it.
no, it would come back to the county.
I transferred it into my account. I'll
Yeah.
tell you about it later.
No, it would come back to the county if
That's
that.
on
Just a
tape.
reminder that
That
this
is
is
a
being
joke.
recorded.
The other thing I'd like to say on reassessment, and I want everybody to keep in mind, is I don't know if there's ever been a cost tracked on the reassessment of what we're losing when the large companies come into town. They have their team of attorneys come, they tear off our right arm, and they beat us with it because we haven't had a reassessment since 1989. And they use that to their advantage, and we're losing a lot of appeals based on that. So I think we need to look at the cost of that, as well as, I know it's expensive and I know nobody wants to do it, but I think to your point is how we market it, it's not a reassessment, it's more of a fairness of getting things back to where we need to be. That's just the points I wanted to.
Thank you, Mr. Treasurer.
Let me elaborate on your first point you made about access to it. One of the other things we found significantly with the current system is the reporting of the current system. If you're not a highly trained, skilled user of the system, the way the filters work in that system, you can run a report and the report will not be accurate. And we have to remember, we have to have a reporting function for all departments that allows non-accountants. You're an accountant, you're a treasurer, you're an accountant, you're running fiscal information all the time. We have to allow user departments who are not accountants to be able to access their information too. So if we would go down, let's say we hypothetically went down the road of the current system and trying to get everybody access, we'd still have the reporting limitations. And we don't have the ability to build those standardized reports and push them out to departments within that current system. The system's an old system. And it really was a system, AccuFund was really not designed for a general government. It was designed for a special purpose government. Particularly a special purpose government that has heavy cost allocation functions in it. But it doesn't do the things that we should be doing in a general government within that system. It may work perfect for the treasurer's function, for accounting, for cash management, for reconciling bank recs, for interface with bank tapes or whatever, for outstanding checks. But when it comes to county as a whole and the fiscal reporting and information that needs to flow to every department to allow them to appropriately manage the reporting function really would be a nightmare. We have actually seen some other counties try to push AccuFund out, and they quickly pulled it back because it became a disaster. People were getting wrong reports because they weren't setting the filters right in the reporting. It is a system that you have to almost be an accountant to use.
Prime example of your point is our county auditors will come to me and say, this isn't right, this isn't right. It's like, well, then we find out they didn't run the report.
Yeah, they didn't run the report right. Well, and some of that is training, and we do have some experience with your county auditors. We have experience with elected auditors all over the Commonwealth. County auditors really aren't auditors. They're elected auditors. They don't have an audit background, and I don't want to beat up on county auditors. If any of you are here, I'm going to apologize. But in general, county auditors are not auditors. And the primary responsibility of a county auditor under the county code is to file the DCD report, the annual financial report with the state. County auditors, and we do have a comment in here, by the way. I just didn't elaborate on it because we didn't make it to the major ones. There are a lot more comments that I didn't cover. They could add a lot of value if they had some audit training, which they presently don't have, and they had some GASB training, and they help do things like row office audits and some of the cash account audits that really need to be done, or tax collector audits, or things like Ed was referring to. If anybody would consider combining tax claim and treasurer, to audit that function, so you didn't go and do what Ed said happened in Lawrence County. No. Well, I wasn't either. I wasn't implying that would ever happen. But, single points of failure occur, when you make changes, and obviously segregation of duties, making sure you don't have conflicting duties when you make any of those changes is very important. And that's another limitation in that system, in that there isn't always segregation of duties in that system. And I'm not going to elaborate any more because we don't want out where they're not out already, to create a problem that doesn't exist. But the controls in that system aren't ideal. They could be a lot stronger. Maybe some of them weren't turned on when it was set up. It certainly was not ideally set up as well. The chart of accounts is horrible. And, I'm going to say that nicely, without being nasty, but when there's almost more miscellaneous accounts than there are accounts with names, there's a problem.
There's a miscellaneous. Well,
it's just too commingled. You can't tell what's there. So there's a lot of work that has to be done even before you get to a new system. There'll be a real hard time mapping data to even go to a new system. So we can talk about that extensively for hours if you want to talk about that. That's not the purpose of this, but there is a real need for a new system here. The system is not meeting the needs of the county right now.
Other directors, Ed?
Ed Burris, Veterans Affairs Director. Sorry I couldn't meet with you.
Oh, no problem.
You had made the statement about charging for services. There are certain departments that are not allowed by statute to.
Yeah, well, you're one of them. You're one of them.
By the way, your system did very well, though, at the interview.
Thank you.
Yeah, what example would be like register and recorder or something, right?
Well, register, recorder, prothonotary, sheriff has some that they do. I didn't mean to point to you. I'm sorry. I just saw your uniform. Sheriff's office has some that they do.
Assessment.
Assessment has some, not as many, but they do have some. Yes.
Okay.
Well, one of our problems is the fees for tax claim were established in 1947.
Right.
They haven't kept up with
Right.
the cost.
Well, that's legislative, though.
Right. Other departments?
But that can be worked on through the County Commissioners Association, too. If it is a real big problem and it is costing you a lot more, but right now we don't even know what it's costing us to provide any of these services. So the first step is to capture that data so we can measure it and compare it to what we're charging. My suspicion is they're probably all inadequate, but because they just aren't routinely maintained.
In the case of tax claim, it certainly is. The fees that they collect are higher than what the cost of maintaining the office.
Right. Currently.
Yep.
Other questions? Oh, Todd?
Todd Lake, Public Safety Director. One of the things we've been doing regionally is a whole lot of cost sharing. We've done more than 9 other counties are together doing a lot of regional, or CAD, or computers. We're doing an enormous, probably over the last, since we started doing this regularly since about 2012, more than likely we've saved, this 10-county region, multiple billions of dollars, if not more. Counties probably close to $1 billion in itself. So, is there other counties doing stuff like, and another thing is this continuity of government. If I've got a CAD that's the same CAD that 9 other counties is using, if I get hit by the proverbial bus, a public safety director from another county can come help train.
Right.
It's the same way if we're going to get a system for a fiscal office. Why aren't we using the same thing as McKean County or Erie County? So we're not reinventing the wheel.
Actually, I'm gonna give Ed and DCED a plug here. And you owe me $20 afterwards, by the way. The western part of the state.
This meeting is being recorded.
The western part of the state is much farther ahead than the rest of the state. And I don't know why. It's probably guys like Ed running around out there trying to force this to happen. But cost sharing and co-arrangements are much more prevalent in the western part of the state, particularly the northwestern part of the state. Southwest isn't as, purchasing consortium driven. You've got your healthcare consortium, you've got a lot of purchasing consortiums, you've got a lot of sharing arrangements here. When you get down to the southeast part of the state, they think they all have enough money, they can all do it on their own. I don't know. They just don't seem to communicate and share. So I commend you for that. There are good things occurring, and we do talk about some of them in the report, and that is one of them. You do have purchasing consortiums for all kinds of things and sharing arrangements for all kinds of things, and that's great, and it allows for the cross-training of the people. So I commend you.
Any other department head questions? Bill?
Bill Gallagher, Information Technology. You made several references to deferring technology purchases. From a departmental perspective, we look at technology from a 5-year and a 7-year rolling obsolescence plan. We turn that in every year. It's something we submit, something we provide to Ed, and something we submit to the board as part of the capital budget plan. If the budget doesn't allow the replacement of items, due to other requirements, as a department director, we can't, say, hey.
You can't force them to give you money.
We cannot
exactly.
force the board to replace something. So there are years that we're able to stay on a 5-year or 7-year technology replacement, and there are other years that we need to defer, and that's a function of budget.
Right,
It's
exactly.
not a function of us not wanting to stay on that process.
Yeah, let me make it very clear. When I said there was deferred maintenance, we didn't mean at the department level. We meant at the money level. And primarily, most of our technology comments, believe it or not, are more targeted toward the software side. There's been a lot of deferred maintenance on software. And software, unfortunately, you get what you pay for. If you don't keep it up to date, you got an old system that works as good as it was when it was invented. And you're not getting anything new, and you're still maintaining all the labor when you could have spent $20,000 and eliminated labor. But
Quick reference
it's
on
deferred maintenance.
AccuFund commentary is AccuFund is not our long-run solution. And I'll just make that comment.
It's
Being
not.
in the software business for a long time, several decades, I can tell you that that is not a system that is going to be our solution moving forward. And if we try to, it's going to be something that we're going to continue to struggle with. So it's a solution that we need to move away from when we're able to. That's
Yes.
not me not disliking AccuFund.
No, nor me.
It's a statement of function.
It's good in certain situations. This is not one of them. The other issue with AccuFund is AccuFund has had its own deferred maintenance, internally because of the company size. It is not like other software vendors that, have a lot more resources to maintain and build out the system.
We are likely one of their larger deployments.
Yes.
If you look at AccuFund and where they sit as a company.
Yeah, it's really designed for entities that are a lot smaller than you.
I saw, well, why don't we get Lisa real quick?
Lisa Elections. I know we just talked recently. Do you have any preliminary information on my department?
Other than what I'm going to put in the plan is basically you're the only contained person in election. So obviously one of my recommendations would have somebody cross-train with some other department in case she would be on for an extended period of time. And obviously the other thing we put in the plan is the capital budget for the election machines.
Right. Quickly, Lenny?
Quick question, Ed. We applied for reimbursement for a portion of this in May and haven't seen the money yet. Can you help us get the money? Sure.
Thank you. All right, I have now seen public hands, so Joe, you want to go ahead? Joe Scully, please.
First of all, is it feasible for me to get a copy of this report that you're all glancing through so I can review it? And my other question is, you should tell the legislators in Harrisburg that just because we're rural Pennsylvania, we do work together in different ways, different counties, different municipalities. They should come here and listen to us rather than listen to the larger Philadelphia area. We all work together in this county, all municipalities. We don't get road work done by one municipality without another municipality being there to help us. This is a team effort in this county, but some of our legislators do not believe that. And they seem because we're rural Pennsylvania, we don't know what we're doing. So maybe that's something you could put back to the legislators in Harrisburg from the bigger areas, larger areas.
I don't have a personal lot of meetings with legislators, so I'll do what I can, I promise you. My voice speaks pretty loud, though, because we do work in probably 40 counties throughout, a given 3-year cycle of some sort. So they do hear us, they know who we are, but I'm not sure my voice carries any more weight than yours, but I'll be happy to carry the message.
If you have an opportunity to talk to him, let him don't know, the rural Pennsylvania is not stupid. They work together as a team, and maybe some of them should try and work together with us.
I just wanted to comment. We do work in a lot of counties, and you should be proud that you have a lot of good people working for the county.
You have a lot of good people in the county, plus you have a lot of good people in the municipalities in this county.
And for the record, that's Joe Scully, resident of Glade Township. Nancy, did you have anything?
Oh, I'm sorry, I didn't identify myself. I didn't think I had to.
Everyone knows who you are now.
I'm Nancy Freenoff, the city manager in Warren. I just have a couple questions. One is, one of the recommendations, does it have anything to do with the countywide radio system, EMS radio system? Will we be able to get funding for?
Normally, the EIP does not fund the broadband. Your broadband initiative?
No, I'm talking about broadband. I'm talking about the countywide EMS.
Not just the radio system, yeah. I had called you guys about
the 911 system?
Yeah,
no,
you said no.
Unfortunately, they...
Well, it's not a well, is it 911? Is that what you would couch it as?
Well, there was the 911 side of things, but we're applying for through another funding pool for that.
Okay.
It would not be funded through the EIP pool. I've never seen any emergency services per se, other than if you get out of the EIP and into Act 47, it's a different issue.
Well,
but we're not in that part of it.
Okay, so let me, and maybe you can't answer this, but from the city's perspective, the city is now going to have to spend funds that it hasn't budgeted to
Update.
To be interoperable, right. So can we, if that's a recommendation in the city's EIP, then can we?
Probably not.
Okay.
Probably not.
All right.
There may be other pools of money available.
Okay. Our problem is that we're a 24/7 career department, so there are a lot of funding sources that are not available.
Okay.
But the other question I had, and I don't know that you can answer this, but it's
I'll try.
Well, just something for you to think about. I know that City Council, and I would assume the commissioners also, are loath to increase taxes because our school taxes are so high. We're over 50 mils. You're at 20-some mils. The city's at 19.8. And so you add that up, and you're fast approaching 100 mils for somebody. Is there any way is there any thought to having an overall taxing authority and then have the money parsed out? I mean, you talked about how the population is declining. How can we continue to afford school taxes at 50 mils? I mean, it's ridiculous, and we're the lowest form of government, so the township, we can't afford to pave our streets, to plow them, to have the recreational opportunities that we offer our residents, and still pay for the schools. And I'm not against schools, believe me, I'm not, but the expense is exorbitant.
I don't have a good answer to your question, but the long-term solution is going to be consolidation.
Thank you.
I understand that. I understand that all too well, but that is the long-term answer. That is what business takes into account in making the decision that we do not in the political process. And the only way we're going to survive when we have reducing resources to continue to provide the same services is to cut expense, and the way we're going to cut expense is through consolidation. Now, having said that, to have political entities, whether they're school districts or municipalities or counties or anybody else combined, and I don't advocate for the state of Maryland model, but a lot of things are run county-wide in the state of Maryland. And those services you're describing are no longer provided by municipality, they're taken over by the county. There is some initiatives in some counties to do things like that, but they're not as geographically spread out as you. You have a geography challenge here as well, because you're so spread out as far as your population base. When I'll take Harrisburg, for example, in Dauphin County. Dauphin County might be able to pull that off on a countywide basis because they can set up 3 regions in the county and have enough population center to have that happen. You can't set up 3 regions here. You have 3 major towns here. So you really almost have to consolidate at the county level, and then it's just too big geographically. For example, school district busing would be a nightmare. I'm not even sure how you'd accomplish that. So other than combining administrative costs, maybe at an aggregate level, which is not insignificant, by the way, but you got to get through the political and the identity issues that go along with living in a community or being part of a school district. And that's tough. It is tough.
Warren County is one school district.
It's important to note that most of the other counties have multiple school districts within their county. So when you say consolidation, you're talking about consolidating the school districts, whereas the issue that when you say consolidation around here, you're talking about
municipal
buildings or municipal consolidation.
Well, when I use consolidation, I use it more from a resource standpoint and a management standpoint. I don't mean consolidate physical buildings. It's almost impossible because of your geography. But you're already doing a lot of resource sharing in a lot of good ways. It's going to evolve to the next level. Is going to be the answer. That's not probably a palatable answer right now, timing-wise, but that will ultimately be the answer.
Well, the ultimate answer would be doing something about our real estate taxes, and that starts in the legislature.
That starts, yeah.
And finding an alternative way to fund our schools.
Mm-hmm. Other questions?
Yeah, absolutely.
Well, I guess we can wrap up at 1:30 then.
Okay.
If there's nothing else. No other comments from the board?
Thank you all.
Thank you very much.